All right. So next on our list is fundamental analysis. Okay. So the fundamentals deal with macroeconomic events. So macroeconomic events are what happens in the economy which could affect the value, the future value of a currency. Okay. So for example, we have employment and unemployment rates first on our list. If employment figures increase, that means healthy economy for any economy. Okay, people have more money to spend, businesses will be receiving more money. That's also good tax money for the government as well. And there's also GDP figures that are reported, as increase because there's more economic spending. Unemployment rates on the other side really do the opposite for an economy. Okay, so more people are out of jobs and actually looking for jobs. That's what they're looking for when they're counting unemployment rates. Okay, so more people are actually looking for jobs, but they find it hard to get those jobs, and that means it's bad for the economy because people have less money to spend, and the well-being of the economy also does not go to a favorable position. Next, you also have retail sales. Okay, so if there's more sales for stores being reported, that means that the consumer spending is good. And if people are looking to spend good money, that means the economy also performs well because the government also makes profits from taxes. Political events as well, such as you guys seen in 2016, Donald Trump becoming president. Okay, there's been lots of political events actually in 2016 that happened. Mark Carney also resigning as the Great British Pound Prime Minister as well. Okay, interest rate decisions. For example, the Fed hiked interest rates in December 2016. That was good news for the US dollar. Inflation as well. You have to account for inflation. Okay, inflation, uncontrolled inflation can really plummet an economy. So inflation is basically to control economic spending. We'll talk about inflation on another time. Natural disasters as well also occur, and these you cannot plan for, okay? Everything else on the list can be found inside your financial calendar so that you know exactly what to expect and when. Natural disaster, for example, a volcano hits California. That is bad news for the US economy because how much money will they spend on just fixing that one place? Okay, so there's a lot of government resources that have to go into that natural disaster there. Next on the list, we have what we call leverage. Okay, so leverage accounts for the deal size or the size of the risk. Leverage allows you to borrow money from your broker and take higher risks with less capital. Without leverage, trading would be pointless and reserved for the rich. Okay, so for example, let's see leverage in action. Let's say I want to buy the Australian dollar to the US dollar. Current exchange rate is 0.747. I'm risking $200 on this trade. My account leverage is 1 to 200. So the leverage is 200 to 40,000. What does this mean? This means that for each dollar, which is 1, I get to control 200 times more leverage, okay? More currency with that $1. So in this case, $200 would be the equivalent of $40,000. This is exactly what I'm saying. Trading would be reserved for the rich because if we had to trade these micro exchange rates that happen on a day-to-day basis, do you imagine how much money you'd need to pump into one trade to actually get a good return on investment? And this is where leverage comes into play. Okay, so let's clarify leverage. Okay, there are first of all different account types in forex trading. So let's say you open an account and it says that your account is a standard account type. Okay, your leverage is 1 to 200. For every $1, you can purchase 200 times more currency. Okay, so 200 times 200 in my example, $200 times 200 times more currency is $40,000 worth of currency that I can control. Let's see how leverage affects a trade. Okay, Australian dollar US dollar is currently at 0.737. Okay, actually at 0.747. So I sell the Australian dollar to the US dollar at 0.747. My target is 0.737. Okay, so how much do I get? 0.01. Multiply that by how much? My leverage, which is 40,000. So this is how we actually at Currency Academy calculate profits, and we'll actually show you how. If you visit the website, we'll actually add you to our group so that you can communicate with us and ask us questions on our email address as well. Okay, so this is $400 profit. So sounds very good. How much did I risk initially? $200. How much am I making back? $400. Sounds very good, okay? It makes you want to jump straight into trading. But you should know that leverage is a double-edged sword, and you should only use leverage with caution, okay? Because you will soon see that using too much leverage is bad for your account. Okay, so just wrapping up, guys, let's talk about the trading platform because I want to show you guys a practical example of opening and closing trades. We'll also go into using all these trend indicators, your oscillators, in a different video, but this is the first video. So trading platforms such as Easy Markets offer simplicity. We chose Easy Markets for the contest due to the simplicity of the platform. Okay, so Easy Markets on one platform offers a financial calendar, fundamental news reports, an inside viewer, charts, as well as instruments which you may look to trade. So hold on as we switch over to the Easy Markets platform.